All right, today we're diving into one of the wildest earnings reports I've seen in a while, Bitdeer's Q3. Seriously, this thing was a tale of two cities. The top line and the bottom line told completely different stories, and it gave the market total whiplash. So let's unpack what on earth happened here.
First up, the good news. And I mean the really good news. Bitdeer pulled in almost $170 million in revenue. That is a jaw-dropping 174% jump from last year. They absolutely crushed analyst expectations. A fantastic performance on the top line, no doubt about it.
But then, you look at the bottom line, and whoa. The company reported a GAAP loss, that's just the standard accounting number, of $1.28 per share. Now, Wall Street was expecting a loss, sure, but they were thinking something like 14 cents. This wasn't just a miss, it was a spectacular miss. Not even in the same ballpark.
And here's what that confusion looks like in the real world. You can just see the market trying to figure this out in real time. Before the market opened, the stock was flying high on that huge revenue number. But once the computers and the traders saw that massive loss per share, the story completely flipped. The stock opened up and then just sold off hard all day long.
So how do we make sense of all this? Here's how we're going to break it down. First, we'll look behind those headline numbers to figure out what was really going on. Then we'll get into the huge story here, management's massive pivot into AI. We'll cover the tough questions from the Q&A session, and finally, I'll give you our take on what to watch for and our official rating.
Okay, so let's get right into it and dig into that crazy earnings per share miss. Was the business actually falling apart, or was something else at play? The total net loss on paper was a monster, $266.7 million. But here's the key. If you actually go and read the fine print, you realize this wasn't really a cash loss from their day-to-day operations.
And the culprit is this, a really weird accounting rule. It's called a non-cash derivative liability. Look, here's the simple version. Bitdeer has debt that can be converted into stock. As their stock price goes up, that debt becomes more valuable. The accounting rules, bizarrely, force them to report that increased value as a loss on their books. So, get this, the better the company's stock does, the bigger this paper loss looks. It's totally counterintuitive, I know.
And you can see that once you strip out all that accounting noise, the actual business looks, well, pretty fantastic. Their adjusted EBITDA, which is a much better look at cash flow, went from a loss of about $8 million to a positive $43 million. And look at that gross profit. It exploded. Their margins are getting way, way better. This tells you the core mining business is actually quite healthy and getting more efficient. Taking a quick peek at their financial health, things look pretty solid. They're sitting on a nice pile of cash, almost $200 million, plus another $250 million in crypto. That's a good cushion to have, especially when you've got about $824 million in debt.
Okay, so the mining business is healthy. But you know what? That's not really the main story here. The thing that has investors so excited and so nervous is the company's future. And according to management, that future is all about pivoting into artificial intelligence.
And you gotta hear this quote. This one line is the entire bull case in a nutshell. Management came right out and said they think they can generate a revenue run rate of over $2 billion by the end of 2026 from their new AI cloud business. That's not a typo. $2 billion. This isn't just about mining anymore. They're trying to become a major player in AI infrastructure.
And they want you to know this isn't just some fantasy. They laid out a concrete roadmap. They are already in the process of converting mining facilities in Norway, Washington, and Tennessee into AI data centers. And then there's the big one, a massive new site in Ohio that's set to come online in early 2027. They're definitely putting their money where their mouth is.
But of course, a huge vision like this comes with huge risks. And the analyst Q&A session, well, that's where the rubber meets the road. This is where all the skepticism and the really tough questions started to fly.
And right away, we got a piece of bad news. Management confirmed that their next-generation mining chip, the SEAL-04, is significantly delayed. Now, this is a big deal. For a company that builds its own tech, having your next big thing delayed raises serious questions about your technology roadmap and your ability to compete. The other big reveal was a major shift in their AI game plan. They were supposed to do this with a partner, to share the costs and the risks. Well, they've decided to scrap that and go it alone. The upside? They get to keep 100% of the profits. The downside? They also have to shoulder 100% of the risk and find a way to pay for it all themselves. That's a gutsy move. So you can imagine what the rest of the Q&A was like.
Analysts were hammering them on these points. How are you going to fund this without a partner? What's the real story with the chip delay? Can you even get your hands on enough NVIDIA GPUs for these data centers? It all boils down to one word: execution. Can they actually pull this off?
Okay, so let's put it all together. You've got a core business that's doing just fine. You've got this huge, potentially game-changing vision for AI. But you've also got some very real, very immediate risks. So what's our take on the stock?
This really is the great divergence. The bulls are buying into that $2 billion AI dream. They see the huge power portfolio and the healthy mining business as the foundation for something much bigger. The bears, on the other hand, are looking at the mountain of execution risk, the confusing accounting, the critical chip delay, and the massive bill that's coming due for this AI pivot. Both sides have a point.
For us, all of this nets out to a market perform rating. The AI opportunity is just too big to bet against completely, but that chip delay and the challenge of funding this whole thing by themselves are major hurdles. Until we see them hit some key milestones on this AI build-out, we think the stock is probably priced about right. Now, if you're looking for a trade idea, you could think about a pairs trade. Go long Bitdeer and short a crypto miner that doesn't have an AI story. That way, you're betting on Bitdeer's unique AI angle while hedging out some of the risk from the crypto market itself.
And as always, remember this is not financial advice. Please be sure to do your own research.